Hello everyone, thank you for joining us today and welcome to this presentation of the three main components of successful strategy. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. If you're not familiar with our website, as we always tell everyone, we are first and foremost an educational company. It's our philosophy that the reason why most traders fail is because they haven't been fed the proper information and knowledge, that things that have stood the test of time. And so they're basically basing their trading decisions either off of someone or something else telling them what to do, or basing it off of faulty information. So what we do is we provide all of our students and members all the tips and techniques that I've accumulated in my trading career. I've been trading for 38 years, going on 39 in just a couple of weeks. I started out my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist was the gentleman that used to make markets in roughly about 50 stocks. So if you wanted to purchase or sell a particular issue, you had to go to the trader who specialized in that, and that's what I did. I traded through the crash of 1987 and the bull market that followed, so I really have seen and experienced just about every market environment. I've traded just about every market trading system or strategy. I know what works in terms of consistency, and I know what doesn't. So what I do basically is I teach all of my students and members the things that I've accumulated that have consistency and that I actually use in my own trading as well. Now today I'm going to give you 3 great components that you can actually add on to any current trading method you're using right now, and I really feel it'll increase your odds for success. Or you can actually build a strategy based off of them. So I'm going to go into detail and show you exactly what they are, and then also show you how simple they are, because most of the time it's the simplest things that have the greatest consistency. But we are required to show you this first, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 main components. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this. So as you're taking a brief moment to view the disclaimer, I would also like to invite each and every one of you to follow us on Twitter if you haven't started by now. I post free information on a daily basis, anywhere from daily financial wisdom to actual signals that our strategies have generated. Just a couple of weeks ago, we posted a really great buy signal in the S&P, or in the basic markets, and the market went up roughly about 400 points after that had been signaled and tweeted on that. We also posted information on the British pound for our Forex strategies. There was a great sell signal that we posted, and that went down a couple of hundred pips right after we did that. So lots of ways to follow us. There's our handle there at SPCLSTTRADG. You may want to copy that down and be sure to follow us. Now, Twitter is because of the way it's structured, it doesn't allow you for a lot of detailed information. So if you're more interested in finding out what we do and in terms of viewing some other videos and learning videos, my sister site, which is Pro Trader Strategies, has put together a Facebook page, as you see right there, protraderstrategies.com on Facebook. And so you can go there and get a lot more detailed information about what we teach, who I am, and what my affiliation is with Pro Trader Strategies. All right. Now, as I stated, we are an educational company. The reason why is because I really feel strongly that that's what's holding back most traders. Upwards of 80% of all traders fail, and I think it's because you're relying on faulty information. And I'm saying this from firsthand experience because when I first started trading, that's the way my trading was. I had a very difficult time. I was really struggling. I couldn't make a dime, and I was on the floor with all this access to inside information and high-speed trading, and I still had a very difficult time. It wasn't until my mentors taught me the things that I teach my students that my trading started to come on track in terms of being consistent. So that's what I really feel. I started specialist trading around 7 or 8 years ago. I teamed up with Pro Trader Strategies, and that's what we do. We just mentor and teach all the things that have a certain level of consistency. So as you'll see today, we really put a lot of emphasis on teaching. As you see, it's my goal to teach you, not to trade for you the way some other sites do by telling you what to buy, what to sell, the perfect time frame, but we really want to teach you this information so that you can empower yourself. This is the same edge that turned my trading around. This is the same edge, hopefully, to be able to turn your trading around. Now, here's what you're going to learn today, once again, because this is a class. I'm going to share with you component number 1, which is it's extremely powerful but extremely simple technique for being in sync with any market you're trading, any time frame, any direction. I'm also going to share with you a particular price bar pattern that you should be looking for regardless of what strategy or technique you're trading. And then lastly, I'm going to show you an entry technique. Many traders fail not because they actually have a bad strategy or method, but it's their entry technique that is failing them. So I'm going to show you a really nice entry technique that you can apply to any method, anytime. Okay? And then we're going to go into component number 1, but before we begin, I also would like to mention that please, if you have any questions, kindly wait till the very end of the class. That way we'll get through all the information. I have a lot of information for you. This is being recorded, by the way. I know that's the number 1 question everyone asks. So if you're having technical difficulties or have to leave early, don't worry. You can request from Pro Trader Strategies a link to this presentation. All right, so let's go into the class now. Component number 1. You must trade in sync with the trend. Now, everyone knows this. This is probably what you're taught on the first day of trading. You have to be in sync with the trend. You'll have a higher level of profitability if you're in sync with the trend. Now, if everyone knows this, then why do the majority of traders fail? Well, I think it's because everyone and their brother has a different idea of what the trend is or how you should find the trend. Some people think it's by having a large number of indicators. Other people say, no, it's by looking at a higher time frame to tell you what the lower time frame should be. Still others say it's particular patterns, okay? Well, we at Specialist Trading feel that we have the most powerful way to determining what the trend is and the simplest. In fact, let me show you this example here. This is a generic example of a particular chart. I specifically left it generic so that you would not focus on the particular market, time frame, or direction, because it will work on any market, time frame, or direction. It wouldn't matter if these bars are 5-minute bars or monthly bars. It absolutely makes no difference. But someone who hasn't taken my courses before would say, if I asked them what the trend was here, they would say, well, Steve, there is no trend at all. We're basically in a range. We're going down, then back up, and then back down again. So I've always been taught you always stay out of a range. You don't want to trade in any type of rangy market because that's where you get hurt. So there's no range here, and I should say there's no direction here, so there's no trend. Well, that's not true, because at Specialist Trading, there is a trend here. And the way we find out is by applying the 50-period moving average, okay, as you see it here. And then you ask yourselves, where is price in relation to that? Obviously, price is above, so then obviously the overall trend is up. It's that simple. Once again, it would not matter if there was a 5-minute time frame or an hourly time frame or a weekly time frame. Makes no difference. But if the majority of price bars are above, the overall trend is up. And more importantly, if the overall trend is up, you should only be a buyer. You shouldn't be selling above the 50-period moving average. Now, we look at this chart here. Once again, someone would say, well, no trend at all. We're in a range, so I'm just going to basically stay out of the way of this particular market. Once again, not true. We add the 50-period moving average. We ask ourselves, where is price in relation to that? Price is below. So the overall trend is down. You see how simple this is? There's no convoluted logic you have to come up with. There's no higher time frame to find out what to do in the lower time frame. There's no pattern you have to look at. It's that simple. You just want to be in sync with the overall trend. Now remember, the most important thing about this, because this isn't a strategy, this is just designed to get you on the right side of the market. But the most important thing to remember is if the majority of price bars are above, or if you are entering a trade above, it should only be a long position, right? If the price bars are below, or if you're entering a trade which is below the 50 period, it should only be a sell position. I guarantee if you use this small but powerful technique, you'll really increase your odds for success. All right, let's go to component number 2. Now that we know what the overall trend is, we want to look for bars that close either in the top or bottom 25% of their range. So what does this mean, 25% of their range? Well, here's a very standard open, high, low, close bar. And it would not matter if it were a candlestick bar. It would not matter if it's a standard bar like this. It would not matter if it's a 5-minute bar or a weekly bar. But what you want to do is you want to divide this bar into 4 but separate but equal parts, as you see here. And if we close in that top quarter, and if this bar, regardless of what type of bar it is, could be a candlestick, it wouldn't matter, but if we are above the 50-period moving average, then the market is telling you that's an indication to buy. And most likely you are going to continue in that direction. What a tremendous clue, what a powerful clue that is coming not from some guy in some webinar or some guy in a chat room, but from the market telling you that most likely this is what I'm going to be doing in the very near future. So if we look at this chart here, once again, this generic chart that is above the 50-period moving average, these are the three bars that close in the top 25%. Now, as you can see, these are all candlestick bars, but it makes no difference. You simply measure the range from the top of the wick to the bottom, you divide by 4. Now, also we can look at a bar like this, okay? It closed at the very bottom. Now, it wouldn't be difficult to determine them, but if you want to just see the formula, you divide by 4 separate but equal parts. If you close in the bottom 25%, and if price is below the 50 period, that's an indication to sell. Not from some guy in a chat room or trading room, but it's an indication coming from the most important thing you should be listening to. That's the market. Remember, it would not matter if this bar is a 5-minute bar, a tick bar, or a daily bar. Makes absolutely no difference at all. So if we look at that generic chart once again that is below the 50, here's a bar that closed in its bottom 25%. Okay, so we found high probability bars. We know what side of the market to be on. Now, how do we enter? Well, we want to enter upon confirmation of trend. So what exactly does that mean? I thought we already found the trend. Here's the rule. Let's say you are above the 50-period moving average and you found a bar that closed in the top quarter of its range. That means you're going to buy, but on the next bar only, if price trades 1 to 3 ticks above that bar that closed in the top 25% of its range. That's it. So we're just not going to buy at the market if we see bars like that. That's where most people lose because they may be right on their idea, but they may be entering a little bit too early at the wrong place. We want to have confirmation that we're going in our desired direction. That means we have to see price trade above the bar that closed in its top 25%. So as we look here, we have 3 bars that close in the top 25%. Now, here we have a setup right here, and this is where we're going to buy, but we have to trade there on the next bar. Now, here's the next bar. Did we go up that high? No, we didn't. So there's no trade. There's nothing happened. As you can see, it's a good thing because then the price went back down lower. Now we have another setup here. Okay, we close in the top 25%. We are above the 50 period. So we're going to buy if we trade here. And as you can see, the very next bar, we traded there. And here's a very important thing. We did not close there. We did not close higher because it makes absolutely no difference. All we're interested in is that intra-bar, it trades there. So that would have been your entry point. And then look what happened. We see the next 3 to 5 bars went up. Now, someone could say, well, boy, that doesn't seem like a lot. Well, how do you know these are not monthly bars? And that went up for the next 4 months, and that's maybe 10 or 20 points. Okay? It's all relative. Now, here's our last setup. We're above the 50. We close in the top 25% of our range, and we're only going to buy if we trade 1 to 3 ticks above, and it has to be on the next bar. So let's see what happened on the next bar. Once again, it traded there, but it did not close there. In fact, it closed lower just the same way this did. So don't worry where it closes. It absolutely makes no difference. All we want to see is that we have enough energy to trade up there. And so you would have entered on that day, and this one had a little bit more volatility to it. So you see how we're taking all of our signals. Everything is coming from the market. I told you when I first started trading on the floor how I really failed miserably, how I was doing all the things we were supposed to do, reading all the books, using all conventional wisdom, support and resistance, Fibonacci, Elliott wave, and I couldn't get any consistency in that trading. But my mentor said, listen, you're trying to base your decisions based off of stuff that really it doesn't have a lot of consistency. It's a lot easier if you just listen to the market. The market most of the time will tell you what it wants to do. Our job is just to jump on board. Let's look at that other example here, the confirmation method to sell. It's basically the same thing, but this time we're going to sell on the next bar only. Now if price trades 1 to 3 ticks below the bar that closed in its bottom quarter of its range. So now we're below the 50. We have a bar that closed in the bottom quarter of its range, and we want to see the next bar trade 1 to 3 ticks below. And that's our entry point. So here was the bar that closed in the bottom quarter of its range. As you can see, we're below the 50s. We're not going to buy anything. We're only looking for sell setups because we're below the 50. All right, so let's see what happened on the next bar. This is where we want to sell, and the very next bar traded below there. Actually traded there, but then closed higher. This is where most beginning students have trouble because they say, Steve, we didn't close there. We closed higher. So I bought it, or I should say I sold it, and then it went higher. So I'm losing on the day. Does not matter. It's the market telling you that by the very fact that it was able to trade below the previous bar's low, that most likely it's going to continue. So you're in the trade, and that's where you enter. And look what happens. Once again, there was no news that we followed. There was no Fibonacci. There was no volume. There was all these things that you've been taught. There's nothing you have to listen to except the market. Now, I've just given you 3 of the rules to probably one of our most consistent and popular strategies, okay, at specialist trading. So you now have 3 of the basic rules. You can actually use these 3 rules to build a strategy based off of them, if you're so inclined, if you're that knowledgeable, or you can actually add any one of these to your current trading plan. And as I said before, I really strongly feel that even if you use just one of these components, they will greatly increase your odds for success. But as I stated, here's a strategy number 4, that has a total of 5 rules. I've just given you 3 of them, okay? I can't divulge all the other rules, but these 3 components I just shared with you make up one of the best strategies we have, okay? Now let's show you some examples of this strategy that applies all these 3 components. Let's start out with stocks for all you stock traders, and we're going to go step by step and look at all the components that I just taught you what to look for. All right, look at a chart here of Costco in October coming into November. Now we're only looking basically at 6 or 7 bars, and where are the bars? Are they above or below the 50-period moving average right here? They're above. So are we going to sell? Not at all. Remember, the odds are in your favor if you trade in sync with the trend. The trouble is most people have a different idea of what the trend is. Well, not anymore, because all you have to do is apply a 50-period moving average, and if you see the majority of bars above the 50, the trend is up. Okay? So that's component number 1. Component number 2, we have a bar here that closes in its top 25%. All right? So we're going to buy if we trade above there. Now, the strategy generated an automatic buy signal. But remember, we can't buy until we trade 1 to 3 ticks above, and it has to be on the very next day. And look what happens. It traded there, and 13 points coming into the first week of November, okay, just about a month ago. Once again, we didn't listen to any news. We don't look at earnings. We don't look at volume. Don't overcomplicate your trading. That's why most traders fail. You're putting your trust in things that really don't have a lot of consistency behind them. All right, let's look at ENDP. For all intents and purposes, we are below the 50-period moving average right here. The majority of price bars are. Sure, we had one bar that closed above, but then we quickly went down below. So the overall trend is down. If the overall trend is down, are we going to be buying? Nope, we're only going to be selling. So if that's the case, then we want to look for a bar that closed in its bottom 25%, which is this bar right here. We closed in the bottom quarter. All right. So now the other 2 remaining rules of the strategy, which I'm sorry, once again, I can't divulge because it cost hundreds of dollars, but I'm just giving you 3 of the rules. It automatically generated a sell signal in ENDO International. So are we going to just sell right at the market? No. We have to apply component number 3, meaning we'll only go short if we trade here on the next day. So let's see what happened on the next day. Well, yeah, it traded there, and coming into the end of October, into the beginning of November, the stock fell out of bed 30 points. Now, I'm not saying you would have held it for 30 points to the sell side, but I'm just showing you how much room you have to move in your favor when you just follow these simple components. Okay. Another thing, we realized that you could apply options to this. You could just purchase a directional put, or you could put on some type of spread. It wouldn't matter, actually. It's up to you. Now, a lot of people always say, boy, Steve, sometimes there's these big moves. I guess I missed it. I have to look for something else. Well, not really, because we're still below the 50-period moving average. And oftentimes you'll see another setup appear, as we have right here. We're closing the bottom 25%. So the software automatically generated a sell signal. And we went short, and look what happened. Went lower even again. So you're never going to miss. There's literally hundreds of these setups occurring each and every night in stocks. Here's another one in Hormel. Okay, we're above the 50 period. So are we going to be selling anything? No. Remember, the odds are in your favor if you're in sync with the overall trend. Where is price in relation to this green 50 period moving average? Price is above, so the overall trend is up. If the overall trend is up, we'll never be a seller. I don't care what someone says on TV or in some chat room or even on a webinar. Only buy, regardless of what strategy you want to use. Could be one of mine, could be one of yours, could be something from another educator, but only buy if you're above the 50. Never sell, because over time you won't really have anything to show for it. Take it for someone who's been there, okay? So we're above the 50. We close in the top 25%. Our software for the strategy generated an automatic buy signal, but we can't just buy at the market. We have to wait for it to trade above on the next bar. And we did, and the stock went up 8 points coming into November. And there was another setup had you missed that as well. Now here's the last one here in PRGO. We were originally above the 50, but then the majority of price bars were below the 50. So at this point right here, when we had 3 to 5 bars close below, the market, not someone in a chat room once again, but the market was telling us only sell because we're in an overall downtrend. Why? Because we're below the 50. The majority price is below the 50. All right. So if we're looking to sell, we want to find bars that close in the bottom 25%. These two bars right here that also met all the other requirements for the strategy. So these were two sell signals. Now you could have taken this first one and taken a very small gain, which would have been perfectly okay. The second one really didn't work out well, but you'd still most likely be in the trade if you traded it more aggressively. And then ultimately, once you entered, well, it would have kicked in. You see how the odds are in your favor by being below the 50 period moving average, okay? Once again, we realize that, with higher price stocks such as this, $180 stocks, not everyone's going to be able to short, even if you don't have the right account size. Once again, it doesn't really matter. You could purchase puts. It would be just that simple. The same strategy signal would apply, but instead of going short stock or buying stock, you just have to purchase options. Now here's one in crude oil, all right, just to show you that, this only doesn't work on daily bars of stocks. Here we have crude oil, and this is actually a monthly bar. I want to show you, a lot of people were saying, boy, I don't believe how crude oil really fell out of bed this past year. How would anyone know this? It was acting fairly strong, but boy, it just kept going lower and lower almost for the majority of 2015. Well, if we were looking at long-term bars, monthly bars, where is the majority of price? Okay, we had one bar, 1 month that closed above, but the majority of bars closed below. So this is telling us that crude oil, even as far back as July 2014, over a year ago, crude oil is in a downtrend. So anyone looking at the simple technique on a long-term type of investment would not have even touched crude oil as a byproduct. They would have said, no, crude oil should only be sold and not purchased. So therefore, if you're going to be selling it, you have the bar here that closed in the bottom 25%. The strategy generated a sell signal, but we can't short it unless on the next month we trade below. And look what happened. This is what crude oil has done all the way up to the month of November. We didn't base this decision based off any fundamental news. We didn't care what's going on in the other part of the world. We didn't look at any economic indicators. We didn't look at volume. We didn't look at any of that. The only thing we looked at, we asked ourselves, where is price in relation to the 50? And then we look for this structure, this setup that I just taught you of these three main components put together. All right, so let's see how this works on the E-mini S&P. And I want to show you this particular chart right here. This is a daily chart. I know most people trade the E-mini S&P on an intraday basis, but I just want to show you how we switch from going short to going long. A lot of people this last month, starting in October, were really surprised that the market kept going higher and higher and higher. They're looking at terrible economic news. They're looking at terrible things going on the other side of the world, terrorist attacks, wars going on, and they figure, how can the market go up? It has to fall out of bed. We're not concerned with any of that. We just ask ourselves where price is in relation to the 50. Now, coming into October, the majority of price was below the 50. And the same strategy generated a sell signal right here, which would have giving you roughly about 110 points to work with to the downside. Okay? Now, once price started rallying coming into the first week of October, now we had a confluence of bars above the 50. So what's this telling us? It's telling us that the overall trend is now up. Therefore, we're not going to sell the market. A lot of people, I spoke at a conference in October, a lot of people were very bullish on the market and they kept shorting it the entire way up. They asked me what I thought and I said, as long as we're above the 50-period moving average, the overall trend is up. I'm not going to sell anything. In fact, this same strategy generated a buy signal the second week of October, which generated 90 points in their favor. And guess what? We're still above the 50-period moving average. A lot of people yesterday thought the market was starting to roll over. How would that have worked for you had you sold the market? If we are above the 50, only look to go long. Over time, you'll have a lot more to show for it. Now let's look at an intraday chart here. This is an hourly chart of the E-mini. The majority price is above. Okay, this was the end of October coming into November. So if we are above the 50, that means we're only going to be taking buy signals. And we generated a total of 5 buy signals here. Now here was a faulty signal. In other words, we had a small loss. As you see, you would have purchased here and you most likely would have been stopped out. But that's the beauty of using these techniques. Remember, it's not about saying that every trade is going to be a winner. It's more about having this consistency. So we're looking for 2 steps forward, 1 step back. So every once in a while, with these components and techniques, you will have some small minor losses. But the beauty about them is the consistency. Remember I told you how when I first started trading, how I had no consistency in my trading? I was basically 1 step forward, 2 or 3 steps back. But now that I just learned to strip away all the noise and things that I was relying on and basically just listen to the market, well, you see here you have a very high level of consistency with your trading. Now once we started closing below, even though the majority of bars didn't, this was a more aggressive trade that we teach for our aggressive traders, it's generated a sell signal because you close below the 50 and in the bottom 25%. So if you were a more aggressive trader, you could have taken this and look what happened. That was an hourly chart. Here's a 5-minute chart a couple of weeks ago. The majority price starts off being below the 50, then it comes up being above the 50 in the last hour of the day. Okay, this was just roughly the last 4 or 5 hours of the trading day on a 5-minute time frame. While we were below the 50, we are only going to be sellers because the majority price is below. As we can see here, we had 2 or 3 closes above, a little pop above, but that's still not enough to tell us that we should only be buyers. And then when we went above and we had a confluence of closing above, well, then we're only going to be buyers then. So as you can see, using this technique as well as the strategy we had 1, 2, 3 sells. Each one would have generated gains and 3 buys. Once again, 2 were winners, 1 was a loser. So out of 6 trades in the last 3 or 4 hours, you had 5 profitable and 1 loss. Pretty high consistency. Now we can also apply this to the Forex markets. Let's go to a completely different market and a completely different time. This is a daily bar chart. The majority price bars are closing above, and we have a bar that closes in the top 25%. So the software generated a buy setup, but we can't go long at the market. We have to wait for price to trade above. All right, it has to be on the very next bar. As you can see, it did, and in 3 days, the euro dollar went up 525 pips. Okay, that's roughly about $5,000, $5,200 per contract. Once again, I'm sure there was some news or something that came out that caused the euro dollar to go straight up like this in 3 days, but we weren't aware of any of that. In fact, we don't care about any of that. We just want to learn and listen to the market. Now that was a buy setup for all of our Forex members in the euro dollar. Let's look at a weekly chart of the Australian dollar. This was last year in August. We were above the 50, so the majority of price bars being above were telling us the overall trend is up. But in September and October of last year, we had a confluence of bars closed below. So this is enough to tell us in October, roughly about a year ago, that we're only going to be short the Australian dollar on a long-term time frame because this is a weekly chart. So if we're below the 50, that means we're looking for bars that close in the bottom 25%. And if we use the same strategy we've been telling you about that applies all 3 components, look at all the sell signals you would have had. Had you just taken the very first one, that's 2,100 pips in your favor. Okay, that's $21,000 in 1 year per contract. Once again, we're not saying everyone would have stayed in that long. I can almost assure you I wouldn't have. But at least once you get in, you have this confidence of knowing that things will go in your direction. Okay, so let's recap now before we go into question and answer period, and let's go over what you learned today. Because remember, you can apply these, and I'd like you to apply them to your trading. I really feel they'll add to your level of consistency, whether you use all three of them or just one or two. Okay. First one, we taught you how to trade in sync. If there were one component that I could use for the rest of my life, but it could only be one, it would be this one. Meaning that being able to apply the 50-period moving average and then ask ourselves, where is price in relation to the 50? If price is above, I'm only going to be a buyer. Doesn't matter what strategy I use. So you don't have to even purchase one of my strategies. It could be one of yours. But if you add this simple technique, I really feel you'll increase your odds for success. Remember, if price is below, you should only be a seller, whatever strategy you decide to use. Like I said, if I were stranded on a desert isle, this would be the component I would always use. It kept me out of so much trouble and put me on the right side more than I can, ever thought I'd be able to. Now, once we know what side of the market to be on, we look for a particular price bar pattern. If price is above the 50, well, we're looking for the bar to close in its top 25%. If price is below the 50, we're looking for a bar to close in its bottom 25%. Why are we looking for these bars? Because they're clues coming from the market, not from somebody in a trading room or chat room, not from some guy on TV, but they're clues coming from the market telling us that most likely we're going to continue in that direction for the next 5 bars roughly. Okay? So what a great clue to have, to know that most likely we're going to continue. And then that's not just enough though. We have to have some structure for entry. That's our entry technique, where if we find these bars, we only want to buy if we trade 1 to 3 ticks above, and we only want to sell if we trade 1 to 3 ticks below. That's how simple it is. These are the 3 main components, and then we share with you how they turned into one of our most profitable strategies. Now ask yourself as we close here, do you think any one of these edges, any one, could have helped your trading this past year? Okay? Even if you just used one, I can almost guarantee if you look back at your last 10, 20 trades, if you just would have applied one of those, most specifically the 50-period moving average, you would really have greatly increased your odds for success in 2015. Here's what we're offering all of our attendees today. This is our Secrets of a Stock Exchange Specialist training session. About 3 years ago, I was asked to speak at a seminar in front of hundreds of people in Denver, Colorado. Okay, people paid good money to see me speak, and I spoke for 3 hours and gave many more techniques such as the ones I just shared with you, but they're completely different. Totally different techniques for discerning, looking for high probability edges. Now, they gave us the video to this, and this is what we've labeled as our Secrets of a Stock Exchange Specialist video seminar. It's 3 hours of high quality trading techniques plus a full-fledged strategy. Now, here's what's different than what I just shared with you today. Today, I just gave you 3 components, but there are still a couple of other pieces of the puzzle you needed in order to have a full-fledged strategy. Well, in our 3-hour Secrets of a Stock Exchange Specialist seminar, the video seminar, I actually give you all of the complete rules to one of our best pullback strategies in terms of consistency. In fact, let me show you some recent trades here. This was one in BBY using the strategy that's in this Secrets of a Seminar course. As you can see, it's totally different from what I shared with you today because actually we're looking for pullbacks. Now, a lot of people looking at BBY here coming into October were thinking that it was falling out of bed, that it was going much lower. But the strategy discerned that we were in an uptrend and this was just a pullback. And so it generated a buy signal, and look what happened to the stock. The stock went up very nicely in the next week. Now, it can also be applied to going short. Here's Volkswagen. Even though this is an over-the-counter stock, we've seen a lot of terrible news on this lately about the CEO resigning and falsifying reports, emission standard reports. And the entire time, we had a little bounce. Strategy number 1 generated sell signals. Okay? And here was another one. Nothing much happened here for the next week, but look what ultimately happened when all the news came out about the CEO resigning. So it wasn't as if anyone called us up in advance and told us to tell our members of strategy number 1 to sell because the CEO was going to resign. Once again, we didn't know this. We get all of our information from the chart in front of us. How about the euro dollar? Here's that same chart we were looking at earlier. It produced another signal at another time here. The same thing. We were curling over. A lot of people thought that we were rolling over, but the euro dollar went straight up off of that pullback. Now lastly, we can go to a 5-minute time frame. Here's the E-mini on a 5-minute time frame. As we can see, we're in a downtrend. Obvious to see that, but rather than just sell, to try and look for these bars that close on the bottom, what we're doing is looking for these little snapbacks, these little bounces in price, these little rallies. Okay, so if we add the same exact rules that we apply to stocks, that we apply to Forex market, guess what? Every time we bounced, strategy number 1 generated a sell signal. Now the good news is that I give you the complete rules to this strategy. It's extremely simple, only has about 5 or 6 rules altogether, and I'm going to go over all the rules in the video seminar. This is not something that's shipped to you that you have to wait to receive. This is something that once you decide to become a member, well, it's we furnish you with an online link, and you can look at this at your leisure whenever you'd like. So this is yours to keep. It's not something that disintegrates in a couple of weeks and then you have to pay up for it. This is yours. Now, there's so much information, so much high probability trading edges, as well as a full-fledged strategy that people have paid hundreds of dollars for. In fact, my sister site, Pro Trader Strategies, which promotes all of my courses and techniques, they have this 3-hour session promoted for $997 on their website. But for all the attendees today, we're discounting the price down to $37. I don't think you can beat that. In fact, I would almost guarantee that the majority of you spent more than that today just trading, okay? So you can't get this much information for such an inexpensive price. $37 is a great, great deal. So here's how to take advantage of this, because this is a limited time offer only. It will expire in the next, I believe, 48 hours altogether. So you want to contact Pro Trader Strategies. There is their email address, trading@protraderstrategies.com. You can call them directly at 310-598-6677. Now, you don't really have to contact them because you can simply copy and paste that link at the bottom, and that will take you to the $37 sign-up page. But it's not a live link. Once again, you have to copy and paste that. The best thing to do would go in the far right-hand corner right now of your GoToWebinar column and look under the chat box. They've posted a live link there, okay, which has the $37 offer, and you simply could click that on and it'll take you automatically to the sign-up page, and you can be up and running in just a matter of moments. So once again, I'm going to leave all this information up for you and open up the question and answer box, but please, if you're sitting on the fence, I could understand that if this were something that cost hundreds or thousands of dollars. For $37, once again, I don't even think you can go out to dinner for less than $50 or $100. So this is a great offer, jam-packed with information. And the best thing is you're getting a full strategy. I just showed you some of those recent setups and signals using the strategy that I teach in this course. So it's a ton of information for only $37. But please remember, that's only going to last a couple of more days. So if you want to take advantage of it, be sure and click on that link. Okay, let's see. First question here. First question is, when do you exit? Well, once again, remember, I think I stated, Mick, I'm only sharing with you 3 components or 3 pieces of the puzzle. All right, this is not a full-fledged strategy. So if you want, you can pick any place you'd like to exit. It's up to you, but we go into detail. In fact, I give you a number of different ways to exit in that $37 course, okay? Same thing with stops, okay? Same thing with stops and exit, but if you're asking for stops and you're asking for exit rules, well, then I just gave you everything away for free. And remember, the point is we want to show you in good faith that we're teaching you, but at the same time, we'd like to be reciprocated. So we're discounting this to $37. I don't think that's asking too much. So everything about exiting, everything about stops is all included in that $37 deal. So lots of information. Now, if you've been trading for a while, I don't think it's that difficult to figure where you'd want to place a stop. You could place it just below your entry. You could, and say you're having a risk of maybe a point. Well then, okay, your exit could be up 2 points. That's a 2-to-1 risk-reward ratio. It's simple enough to figure out. It's up to you, but we give you a lot more detailed as well as advanced places in which to exit as well place your stop, all for only $37, okay? Once again, this is information that I learned over, close to 40 years ago on the floor. This is the same information that has really gotten me back on track with my trading, that was able to sustain me for almost 40 years, and this is what I shared with you. Now, it took me a good time to get all this implemented and learn all this information in my trading, and but we're offering it to you in such a discounted price and all this in a 3-hour course so that hopefully you won't have to have that long learning curve. You can get up and running and start using this within the next couple of weeks to really get your trading back on track. I know as traders, we're always trying to start out at the beginning of the year and hope and pray that we have a great year, having all these goals and aspirations. And I can honestly say the majority of traders they never meet them. All right, they never reach their goals. Well, we're at the end of 2015, and I can, most likely say the majority of you haven't met your goals for trading that you really wanted to at the beginning of the year. We're going into the beginning of 2016. If you really want to get on that road to consistency, I think this $37 deal will greatly help you get on that road so that ultimately at the end of 2016, you'll meet your goals. You'll be able to be there, okay? And I don't think you can you really ask for much more at such an inexpensive price. So there's the information. Once again, contact Pro Trader Strategies. They're my sister site. They handle all my promoting of my courses and all of my techniques, especially this great deal we're having. But if you want to take advantage of this, it's only going to last for a couple of days, so you have to be quick, okay? There is the link at the very bottom. You can contact them with more if you want more information. If you're having trouble with it, I see that someone is saying the link won't open. Simply send them an email or call them up. But remember, the link at the very bottom of this page is not live. You have to copy and paste that onto your browser. If you want to go to the live link, simply go to the chat box on the far right. You'll see there under last chance for the $37 deal, okay? I believe also you can copy and paste it. I see some of the Pro Trader Strategies is pasting it on your question there as well, okay? But you can simply go to the chat box on the right, click that on. It will automatically take you there. If you're still having trouble, don't worry. It will take you automatically there. You can call them up, and if you're having difficulty, just email them, okay? And they'll hold you to that price there if you said you had difficulty in the next 48 hours, okay? Okay. Don't worry. I see Dennis is saying he still has trouble. It's not working. I would say probably the best thing to do, Dennis, is to contact Pro Trader Strategies. You can call them, and they'll take your information over the phone, or just email them, and they'll be able to do it. There may be a problem with your computer, or maybe a problem with the site at this point. Okay, we may be getting inundated with too many people trying to buy at the same time. But don't worry. If you did try to, we'll hold the $37 deal for you. Okay. Okay, in closing, I want to say thank you so much for attending. I really hope you take advantage of this. I know you will be pleasantly surprised with all the information that I learned on the trading floor almost 40 years ago, things that have sustained my trading as well, and things that I continue to use on a daily basis. Thank you so much for attending. I wish you the best of luck, and I look forward to all of you purchasing this $37 deal and becoming students of mine. I'll see you next time. Bye-bye.